Hey, what's up, everyone? And so today is November 21st and Tuesday. So a little bit of movement in the market today, but going into tomorrow, it'll probably slow down a lot going into the Thanksgiving holidays for it. But anyways, starting off with it, we are looking at the, turn this on, the well, let's go up to the S&P 500 first. And basically all we're doing is, waiting to see what's going to happen with it. Is looking at the 15-minute chart. There's a potential retracement trade down here. I did put the green semaphores on because I plan on using them more for like the 15-minute chart and also the 1-hour chart, since they give more options for it. Like here's the retracement trade using the green semaphores right there. Those are the weakest ones. Oranges are the second, and reds are the highest ones for it. So to have a red, you have to have an orange, and have an orange, you have to have a green within it. If you don't have a green, then it's nothing for it. So not planning on using the green semaphores on the 5-minute chart just because the moves are too small, but mainly for the 15-minute. Then also to look for some like 1-hour trades. Like here's the good one right here. That would that's actually, we'll go ahead and put that on for it as well for the retracement trade setup. Set. There we go. So yeah, that's a real good one right there because it comes back to it, potential from the first one around a 4-point profit for it on the S&P 500. See, it ticked off over here. It didn't even hit the 30% line. Found some resistance for it. Now just kind of wallowing in it. If we go to 5 minutes, see if there's anything going on. Just a mess over there. There's nothing going on in the S&P 500 right now. See here, 1, 2, 3. No, there's no inside triangle trades at all. We need this point right here to come down and get lower than this orange one right down here to create an expanding triangle trade for it, but it's not going on right now. So S&P 500, nothing going on. Here we have a couple potential setups that haven't formed yet. This is the shift pitchfork one that I had mentioned the other day for it. What is this thing for? Is that for the counting? Let's see. Yeah, that's for the counting. Make sure I knew where it was. So we got 1, 2, 3, 4. This one, when it goes back up, will be an expanding triangle formation because we need price to pop back up. Then eventually the semaphore will happen. So when it does, we're looking for the close north of this red line right here, and then target's gonna be up here to beat the yellow line. And also, we also have on this one the potential for a triangle trade. See, there's the high with semaphore red, low semaphore red, lower high semaphore red. So we're waiting for, as long as this one stays, or this move down here stays above that red semaphore, and we get a red one, we'll be good to go. We'll look for the breakout for it. So hopefully, maybe 2 confirmations we do, it's going to create a really nice setup for us because we'll be looking for, say it breaks up to the upside for it. We'll be looking at the 1.146, 1849.7. So, say we get a pop up, it closes above it somewhere like over here, something like that. 36 going up to about 40 point potential gain right there. And the only way it cancels it out is if like it breaks out right here, close above it. Close above it, but then retraces back, hits the bottom line right there, assuming that's what holds for this lower point. It may not. This may keep going lower. This lower trend line right here is just a guesswork of when it's going to go back up. If it goes lower, we'll readjust it. And if after price closes above it and then comes back down and hits the lower trend line, you get in right down there. Then you have your exit just right about the entry level for it for a small gain because it's not doing what we need it to do. But that's the potential one moving up there that we're looking at here in the Russell 2000. But it looks like it is continuing to move down lower. And I just have these Fibonacci extension levels just as kind of like a last ditch effort for the expanding triangle trade to see, if I still want to use where it breaks out of the trend line, closes above it, and the exit is up here at the 2.236 level. That's where like this trade is supposed to go right here for this one. See, it closed through the expanding triangle. Zoom in a little bit right here, 1, 2, 3, 4. And it's on the 5-minute chart using the orange semaphores, but these are green and orange right here, so it's fine. But so it broke out right here. Target we're looking for is 2.236 up here. See right there. Obviously, it has not gone up there and hit it. Now, it did go back down the other way and completed a short setup here down to the downside right here, because this right here was an expanding triangle trade going to the downside. 1, 2, 3, 4. Price came, broke out of it right there to the downside. So when that happened, we were looking at going the other way right here. This is that one, right? Oh, wait, no, that's not it. What is this for anyways? Oh, that's for something else. It was right here, the high. Oh, you know what? It's not. It's not completed yet. Never mind. Oh, wait. 1, 2, 3, 4. Isn't that right? 1, 2, 3, 4. One. That was nothing because that's 1, 2. That just broke down there. That's it right there. Yeah, so 1, 2, 3, 4. So, you know, it actually did not hit forward as well. Let's do that. And then target. So it didn't go down there and hit it that way either. But it did go down for the opposite way. This is what I was looking at right here. So for this setup, it did not go down there and hit it. You know, it looks like now it's turning back down the other way, but I was looking for from this move right here where price went up and hit it right. Was looking for right here. I said, well, let's see how far it'll go down the other way using these four. So we using those two to the upsides. We used these two to the downside, and something interesting happened. It hit the target down here to the downside level for it, and that's where it's found support for it for move back up, and not to move back down. But it just went. That's what. If I used the shift pitchfork for this trade right here, let's see how it works out. See, well, it broke above it on the 15-minute and just hit it right there and finished it out. If you use it for these four right here, actually, that's not it. It'd be the 1, 2, 3, 4. It'd be those four. So the first three right there. 1, 2, 3. So you wait for the downside. There's the downside close right there. Price came back up and went down and hit it right there. So that's kind of like what we're in right now for oil. I'll show you oil real quick. So I am in the shift pitchfork trade for it. And of course, it's not going the direction I want it to go, but I have seen it bounce up a couple times before it goes down and hit it. So the question I did have for it was, if we do in the shift pitchfork trade, and this is the best way I learned, just try a new setup, get in it. If it works, keep doing it. And then, but try to find a way to break it to where it doesn't work. And if it doesn't work, then we get rid of it and go to something else. But so like for this one, for instance, here we have the expanding triangle. 1, so there's the low, there's a high, lower low, higher high right there. So those are the four we're looking for. So then you use the first 3 points of that move. 1, 2, 3, 1, 2, 3, 4 right there. So 1, 2, 3. Then price comes down the other way, closes below the median line. You go short right there. So that would have been your short entry right there. And the target looking for is down here at the yellow line. And so it went down there and hit it right there. But the question I had was, well, what if price reverses, hits the trend line the other way? Should you get in right there and then just get out, you know, close to the entry level for it, just to be safe? In this case, no, you know, it still went down there and hit it very, very nicely. But let me show you oil here real quick. Anyway, so yeah, that's what we have going on over here in the Russell 2000. So a lot of good options. Oh, this is creating another 4 right here. Look at this. 1, 2, 3, 4. So this will be another 4-1 right here when that one gets done as well. So we have the potential for the I'll just delete that. We don't need that. Potential for a triangle trade, assuming if a red one closes, like I said, if this move goes below here, we will have a triangle trade because we have to have a high, low, lower high, and lower low to confirm. So we need a red semaphore to confirm it without going lower than that. But we do have an expanding triangle right here. So 1, 2, 3, 4. So another thing we'll look at is, yeah, that's what this is, right? Yeah, that's okay. That's where we talked about that. Yeah, so that is right there. So what I like to do is, so I don't confuse myself. 1, 2, 3, so far it's 4 and 5. I don't have just a 4-way, unfortunately, move. It's a 5-way belly move, but I've adapted it just to remind myself this is expanding 1, 2, 3, 4 right there. So we're looking for, yeah, so let's go to oil real quick. So this is it. This is what I was looking at this morning. You can see right here on the 5-minute chart, there's an expanding triangle. 1, 2, 3, 4, low, high, lower, low, higher, high. So first 3 points, put the shift pitchfork on. Then when price goes below it right here, get short. So I'm in right there. And of course I got in. Oh, I think I got in over here. I actually got in when I finally saw it. It was right over here. Yeah, right. Anyway, right there, obviously. So, so this is the question I have for it is when the price, oh gosh. Okay. So when it closes below it, all right, obviously the exit was, or is supposed to be down here at the bottom, the alignment's for short in it. But if the price goes the other way and hits the shift line on the top side of it, should you get another contract short there and then just take the exit down to about, the median line to where the break was for it, not necessarily the close, but the break for it, which I've seen before. So if you did that, you're looking at a good 37 tick profit. If you got in right when the short closed right there, you'd have to take like an 8 tick loss. So it's still around a 30, 29 tick gain for it, which is really nice. But is that the way to go? I don't know. We'll see. But of course, this happens literally every single time I'm testing these out. Is I go back and look at numerous trades, see, yeah, it works. Maybe 5% of the time they go against it for finally working. Almost every single time I try for the first time live, it goes against me. It's just what it is. Like, it still gets on my nerves big time, but it's just, I'm used to it now. It's just, of course. The thing I hate about TradingView is when it logs me out so many times. Every time it does it, I just have to refresh or log back in, and then it makes that not be a numerical amount, so I have to adjust it. But still have my exit, down, still making it going down here, assuming this is going to drop out and hit right there. So we'll see how that works. 15-minute chart, see 4-hour chart. It's coming off being overbought, so that's good news for a short. Expect it to eventually turn around and retrace down. Daily is no man's land. Weekly is going off being oversold, so that's not good for being short in it. But we'll see what happens. We'll monitor it and just see. Probably have to hold it overnight, maybe even the rest of the week, just because it's gonna be a slower week. But we'll see how it goes with it. If it doesn't work, then hey, we'll trust this trade setup as well, and try to make pitchforks work a lot. But if they don't, they don't. It is what it is. I go over to the Dow Jones up here. What do I have that for? Oh yeah, so I was waiting. Also, this is it's on a 15-minute or 5-minute chart. Yeah, so this is an expanding triangle trade right here as well. 1, 2, 3, 4. You see if you had used the shift pitchfork right here, it worked. 1, 2, 3, 4. Price came down, closed below it, went down, took it out right there. No big deal, right? But the original one I was looking at was using the trend line break strategy, where 1, 2, 3, 4. So then price came down, closed below it. So when it closed below it, then you start looking for the exit point. The exit point is looks at is the 2.236. So let's put that back on and see it right there. So then what I did is said, okay, well, obviously it reversed off. So let's see how it goes going the other way. And kind of like the other one, look at that. When you go around the 2.236, that's where it's found resistance to come the other way. So, I mean, maybe the 2.236 is still the main exit to look for it, because when it's going back the other way, that's where we found the resistance for it. And maybe sometimes this is actually the way to trade it. Is just sometimes you got to realize it may go completely against you and just have to eat it for a while before it comes back. But that may be it. But anyways, moving on. So we got a couple other things. So we have things on the 5-minute chart. Yeah. So you see orange, red, and again, to have a red, you have to have a orange in it. So we have an expanding triangle right here. See low, high, lower, low, higher, high. Based upon those. So expanding triangle. So if we did the shift pitchfork on it, we're just waiting for it to close below it. I can put a arrow on it to remind me that we're looking for the short when it closes below the median line. Then up here we have a potential long setup. Again, that expanded triangle, high, low, high, high, and then lower, low. So these are just using the green ones. We could also use the orange ones if we want to. So we also have oranges. Let's see. No, we couldn't. 1, 2, 3. Yeah, we could. It'd be the same though. 1, 2, 3, 4. Yeah, it'd be the same. So it doesn't really matter for it. So we're just waiting for a close above it. Once it closes above it, we'll look to take it up there. Good, about 40 tick gain here, assuming this works. This may not, if oil screws it all up, so we'll see. But that's what we're waiting on for the Dow Jones. Going over to the Nasdaq market right here. Just waiting for a retracement trade setup right there. Nothing happening at the moment. Getting a little bit closer, but nothing going on. Not a whole lot else going on with the Nasdaq today. It's just a B, C, D move right up there. That's all that is. And a big move actually for it. Way past it. How much did it go up? 2.78. Yeah. So big move right there in Nasdaq. Here was another of this 1, 2, 3 expanding triangle trades. So 1, 2, 3, 4. There you have the close below it. Let's see how high it went the other way. It went way above the 2.36. So that's another reason why I'm leaning against having the Fibonacci using the trend break being it. I mean, it may come down and hit it. It's over halfway there, coming back down to it, but is that really the avenue you want to go to it, where you just have to get in short right there? Hopefully goes down to 2.236 for decent gain, or otherwise you usually have to eat it for a while until it eventually goes back and hits it. And that's why I like the shift pitchfork. From what I've seen so far, you don't have those biggest swings, and the profit target potential seems to be good without having the swings like there. When we hit it, no big deal. 1, 2, 3, 4. So we'd use these 3 right here. 1, 2, 3. So 1, 2, 3, 4. Closed above it. Let's see, closed above it, went down again for a little bit of a loss, but then eventually went up there and hit it for a really nice gain. So, I mean, here's another example of where using the shift pitchfork, the price did go against you a bit the other way. So price closed above it right. Wait, 1, 2, 3, 4. So closed above it right here. There's your entry point right there. So you can see in profit, loss, and then big profit right up there. Let's get that thing off there. Don't need that anymore. So, I mean, it still could be like maybe the right thing to do is you do get in when it goes the other way at a contract, and then you just get out close to the entry point right there, close to it for just a small little gain. Or is that not the best way to do it? The best way to do it is no, you just hold on to it until it goes up there and does hit the upper side of the band for it. So those are the two options right now. Obviously, this one right here seems to be the safer option, where price goes back the other way. You get in right there and then just get out close to where price breaks the midline right there. So we're about there-ish, 16 points there. And then if you had gotten in right there, you're looking at about a 4-point, so a 12-point gain right there over on the Nasdaq, which is fine, good scalp right there. But that's the big question. Are you leaving tons of profit on the table? If you do that, rather than just holding on to it and waiting for the upper band to get hit, like up there, 150-ish, 152 for it. So I need to put a note. Example, price hits the backside of the pitchfork target. So anyway, so for the recording, I'm going to stop it here and keep streaming though, but for the recording, this is going to be it. So have a good day. Thanks, bye.